Good evening, TheoTrade. This is Corey Rosenblumen. You're watching the Theo Nightly video for the 28th of July, 2020, which means August is not that far away. Now, we're in the middle, just about the middle, of this very volatile trading week. It might not look volatile at the moment, but tomorrow, Wednesday, is a Fed day. I'm not expected to raise or lower rates, no change in interest rates expected, but they may give any type of guidance on future bond purchases and anything else about the state of the economy, and that may move markets. That's going to be at 2 p.m. on the East Coast, 11 on the West Coast. So be sure and watch what the Federal Reserve says and how the market reacts to it. That's number one. Number two, Don will probably go over this in more detail on Wednesday's video, but there are major companies, mega companies, monsters of tech companies reporting earnings, and that's after the close of the bell on Thursday. Not there yet, but that's something to watch. That's going to potentially boost option volatility or implied volatility and spread market movement, or at least create volatility. Maybe they all beat, maybe they all miss, or maybe they split the difference. And those names, to be precise, are going to be, we'll take a look at these in a second here, Apple, Amazon, Google. Now, how do we get this? This is actually, while we're on the topic here, we'll go ahead and attach the window. This is a watch list. I do most of my intraday stock positions or intraday stock watch lists and different things I'm viewing off the side of my desk with these watch list grids. And I can detach and show these as well and sort and filter. So this is a days until earnings column. If I'm about to put a spread on, I need to know, right, a little vertical spread on the profile or some type of short above or maybe a long beneath. I need to know if I'm about to be caught in an earnings play. This is just a little last minute check that helps me make sure I'm not about to put a trade on before earnings. But as Don shows us, this can be a scan tool to find stocks that have earnings and maybe play some earnings butterflies. That's beyond the scope of this video, but I do want to note that in today's session, when it has a 0, that's a stock in the S&P 100 that reported earnings. Triple M. Actually, we'll kind of briefly cruise through this. Triple M, McDonald's, they're pulling back inside profile. Pfizer was a trend to the upside. Altria and Raytheon. Those reported before the market opened. Starbucks just reported. Mondelez and Amgen. We'll discuss these tomorrow. Oh, also Visa. In tomorrow's session, we're going to have General Electric, General Motors, Boeing, and that could be a big mover, General Dynamics, after the bell, PayPal, Qualcomm. That is on Wednesday's session, which also happens to be a Fed day, don't forget. Here's where it's going to get interesting. On Thursday's session, when it says 2, it means 2 days out in the future. I won't list them all just for time's sake, but these are the ones we will be watching extraordinarily closely. Whether or not you have positions on or not, these can move the market. These are big market cap names, the Goog, the Amazon, the Apple, right? Alphabet technically. Caterpillar as well comes on Friday, but we're getting ahead of ourselves. Just know Wednesday and Thursday should be very volatile sessions. And that means that Monday and Tuesday were not, I know it looks a little volatile, but we're not as volatile as the prior breakout to the highs and return back to gravity. Speaking of, the market closed today, ticked up a little bit, but at Don's newly minted 3211 gravity point. That also happens to be our volume profile point of control. Think of it like a super magnet, megalo-roundy or megalo-magnet. All it is a spot that pulls the market to it and is seen to be a fair valuation. Bulls and bears are equal and they are in balance. And the market pulled back to that level in a dramatic sell-off in the last hour. So going forward in terms of planning and positioning, just know that if you are in positions, this week will be unique. And then again, that's earnings, which is typical. But we have the Fed, not expected to do a whole lot, but still could add volatility. We are at balance. We are at the midpoint of the profile. And that for intraday traders is a spot to trade down toward and maybe up away from. But as a swing trader, there's an equal chance that the market goes up to the top or down to the bottom, which means there's no edge. Not if you're not already positioned. So we typically get consolidation ahead of the Fed, typically get consolidation ahead of major stocks reporting earnings, and that's what we're getting. So we are balanced at this new dawn gravity point in the S&P futures of 3211. We're going to start Wednesday right at that point, unless we get a gap. To the upside places here, there is a pocket, and to the downside places into 3190. Until we get outside of this gravity point or newly minted chop zone, please be careful. Please be safe. Not every day is going to be having us swing for the fences in multiple trades. When there is edge, participate, trade, manage risk. When there is an edge, it sometimes is a good idea to stand aside. That is the S&P. The Nasdaq rotated down away from the point of control. And again, this is our profile. There's an advantage to go short above and long beneath and target the red. That's simple terms, but it is probability. On the Dow mini futures, it actually closed underneath the profile. And the Russell is in a tight range, but it still trades down from 1500. And we almost have overlap. That's a nice, quite a big actually, pocket beneath the price. So the theme of tonight's video is consolidation, chop, balance, equilibrium, neutrality, no edge, and that will certainly change. If you want to take a directional play, you can go ahead and do so with calls or puts or spreads. Limit your risk. Don't trade anything naked. Don't sell premium and strangles and straddles and things that are undefined risk. Manage your risk. We do that and recommend that through vertical spreads, in-out spreads, butterflies, maybe even condors, to play some type of range expansion. We don't know which way it's going to move. We just know that a lot of headline risk and headline plays will push the market out of balance, out of this equilibrium, and that will generate intraday and swing trading profits. If you're on the wrong side of that, that's going to accelerate the losses. So please, please, please use this week to be careful. On the Nasdaq, Don's been referencing the Bidless Beast, and we have to keep watching that because it keeps playing into the intraday sessions. A Bidless Beast means there's two-sided markets, the bulls and the bears. And when a market gets moving, especially the Nasdaq, Bidless Beast means there's nobody buying the market. There's no bids. And the market can fall very, very quickly. That happened today. We may see it best on an intraday chart, but that is, in the Nasdaq at least, the Bidless Beast. And that just means directional movement. It means profits if you're playing intraday put positions. And if you're playing alongside the intraday futures, Nasdaq or ETF with the QQQ, that is some rapid intraday profits, but with the Bidless Beast comes difficult entries. And where does one target? That's one of the dawn type of intraday put positions, just walking up and buying a put early in the morning and then selling that put, closing it out for a profit into the close tends to work out. We don't want to do our timing. We don't want to be in this guessing when the top is. Is that the top? Is that the top? Just walk up and get the put and let the Bidless Beast strike. That's an intraday type of strategy, but it's one that, well, I think at least put a little bit of stress and timing and all those factors to the back seat of just putting on the positions and managing the risk. Once you purchase a put, that's all you can lose. So if you're looking for the Bidless Beast to show back up, timing is going to be difficult. Just trust the Bidless Beast. And of course, that is happening through movement in the monsters of tech. We do have our own TheoTrade symbol for that. It's in the shared studies page under Don's section, and you can get this monsters of tech symbol. It's a weighting, and you can put that in a watch list as we have it, or just chart it in your intraday positions. So the Bidless Beast, the Nasdaq, the monsters of tech, you can think of it like this on a comparison. This is what moves the market. And I'll show you how to compare what's happening in the Nasdaq which is right here. I'll actually make this chart larger. And I use market internals underneath my intraday chart, but this is a comparison tool. You can put the SPX, you can put anything else, any other symbol. In this case, I'm putting the Monsters of Tech symbol inside or beneath, and it's not a comparison tool, but beneath the Nasdaq. And what you'll see is it is, for the most part, a one-to-one comparison, such that whatever the Monsters of Tech do, make a high of day, make a swing high, swing low, etc., that's what the Nasdaq does. So if these 5 stocks go Bidless Beast, no buying, just selling, so goes the Nasdaq. This is what we're looking for, guarding against, and for some aggressive traders, are positioned to take advantage of the Bidless Beast. However you're positioned, Wednesday is a Fed day. Thursday is the Monsters of Tech, 3 of them at least, will be reporting. The name of the game is caution, defense, or a little bit of aggression. Always be careful and safe. This is Corey Rosenblum with tonight's Theo video for July 28th, 2020.